Another cost behavior classification is what's called mixed costs. And as the name implies, there's probably going to be a mix of other costs in this. And that's exactly what it is. This is a cost that contains both variable cost elements and fixed cost elements. So from an example of this would be kind of like your cell phone bill. You're going to have a base amount that you're going to have to pay. And then sometimes if you use more than the expected amount, you're going to have to pay extra. And that extra is going to be based on how many minutes you talk or something like that. That's what a mixed cost is. It's going to have a base layer, and then it's also going to have extra depending on how many units are produced or used. Now, we can show a mixed cost using an equation, and this is to express the relationship between the mixed cost and the level of activity. Now, the equation, if you've had high school math, then you've probably seen this equation before. It is y equals mx plus b, or the equation of a line. For us, the y equals the total cost, so all of the cost. The m is the variable cost per unit, or what we call the UVC, unit variable cost. The x is the level of activities, or the number of units sold or produced. And then b is our total fixed cost, or FC. So these are how we would write a mixed cost. If we're going to look at a mixed cost on a graph, it's going to have elements, obviously, of both variable and fixed costs. It's going to have a flat fee, but it's also going to have this slope for a variable cost. So instead of it starting at the origin, it's going to start higher up on the y-axis, but it's also going to have that slope. So this is what a mixed cost graph looks like.